What's up, guys? Welcome back to Everyday Money. Now, I just flew in from Vegas and boy are my arms tired. The good news is that I only lost like $50 because I'm not that big of a gambler, and so once I got to about 50, I was like, I don't want to lose any more money because that's not really my jam. But the biggest disappointment that I had while I was out there was that I didn't see Graham Stephan anywhere in Las Vegas. I figured that he would be standing there by the Welcome to Fabulous Las Vegas sign, handing out smashable like buttons, but nonetheless, no sightings of him whatsoever. But when I did get home, I noticed a notification on my phone from one of the many data scraping apps I'm sure that I have, and it had an interesting, clickable, kind of clickbaity headline to it. And it said that some firm had predicted that the SP 500 will be at 8,000 in 100 months, which is just over 8 years. It's like 8 1/3 years. And like anyone else, I clicked on it because I wanted to read this story because 8,000 just seemed insane. Because right now, when this video is being recorded at the very end of March 2021, we are sitting just under 4,000 for the S&P 500. And so 8,000, double that, is something that caught my eye, and I'm sure it catches many other people's eye as it does on a lot of things with YouTube and the media and what have you. But when I really started putting my head to it and I started putting pen to paper, I found that this was not that big of a deal. Not only was it possible, it is probable that in 100 months that the S&P 500 will be at 8,000 or even more. The reason for this is because that the markets, as well as the money that you have invested in it, will increase over time in an exponential fashion, where the next year builds on the results of the previous year, and then so the year after that will build on the results of those 2 years combined. Now, when you look at this at a 10% annual return, you can see that the S&P 500 at 4,000 right now could very easily be at 8,000 in 8 1/3 years. And that's just at your typical 10% rate of return that's been the norm since records are being kept of market returns. As of the last 10 to 15 years or so, the markets have been returning in the low to mid-teens. There's only been a few years since 2009 where the returns haven't been in the teens or the 20s or even the 30s. So it could be completely plausible that the market could be at 8,000 or even quite a bit more than that. But let's not just look at it from a mathematical standpoint, because everyone can always look back and see that there are dips and ups and downs and crashes and what have you. Let's get into the computer. Let's look at some very recent data since about 1981 that shows that we can generally expect a doubling of the markets about every 7 to 10 years. So let's dive into that real quick. So I just have the S&P 500 pulled up in Google, nothing fancy, and we're just going to take a look at how many years it took the S&P to double or maybe triple during any given time period. So what I'll do is I'll look from today, which it looks like we're up about 0.5% today so far. It's still pretty early in the morning, but so from here all the way back to our first time that we get to 100% gain, which is right about February or August or so, sometime in the middle of 2016 to 2021. It took us about 5 years in order to double the market. Now, people might say, well, this has been extraordinary times. The market's never ran like this. This is, everyone says, the market's on a super high. So let's go back here to April 3rd of 1981. And the market is only at, as far as SP 500, is at 135 and some change. So let's see how long it took the market to double from there. So to the first point where we get to about 100% return, we're right about 1987. So it only took 6 years for the S&P 500 to double in the 80s from 135 to about 270. Now the thing is, back then, those numbers didn't look as impressive. 135 point gain over 8 years didn't look that impressive, but back then, that was 100% return. And now you can say that at some of these places, like in this area here, the returns were very flat for an extended period of time. I'm looking at a Well, that right there was 125%. But if you go from like a low, if you cherry pick your points to another low, you might only be at 2.47% for 7 years. So obviously, if you pick low to low, it might not work. But if you go from today's recent highs and you come back to the first point where we get to a 200% return, you're looking at about, what we got up here, about 9 years that it took us to get a 200% return. Now that's coming out of the biggest recession since the Great Depression. So you could say, well, let's go back to when we get a 300% return. That's going to take a little bit longer because we got to come all the way back here to July of 2003. And now you're looking at what, 18 years to get 300%. But that's still above a 10% annual return for 18 years. So again, only 18 years for us to 300% the market. And so when we talk about the market doubling in the course of 8 1/3 years, that seems very realistic now from the historical data that we just pulled right now and from being able to just do the math for yourself. And so with all this, I think that it's not only possible that the SP500 will be at 8,000 in 8 1/3 years, I think it's very probable that it will be at 8,000 in 8.5 years. And you could make the assumption that 8.5 years after that, it will probably be around 16,000 and 32,000 after that. And even with the ups and downs that the market has and has always had, with those averages, you can see that the market typically goes up at least 10% a year. We base that on historical averages. We base that on mathematical calculations. We all expect to make money in the market, and being that the market is made up of these actual companies, those actual companies intend to go up in value to make more value and more product or more services that people will want to consume, and therefore the market will grow, the economy will grow, these companies will grow, and your money will grow along with it. So when you see these large clickbaity numbers and these clickbaity titles and such, just take them with a grain of salt. Or that they might actually be true, but they still just want to get the click from you. As we go on and the market continues to go up, again in an exponential fashion, the gross numbers are going to get larger and larger. For example, a 100-point drop in the S&P 500 today would be a heck of a lot less impactful than a 100-point drop in the S&P 500 in 1981, where it would be a vast majority of the value, which right now it could be easily one day's trading, which we've seen as of late, and we will see more in the future. At some point, a 1,000-point drop in the S&P 500 is not going to be that big a deal. As you see right now, if you follow the Dow Jones Industrial Index, there have been many more days where the Dow Jones has fluctuated by 1,000 points than there were, 20 or 30 years ago. So just take those with a grain of salt. The numbers are going to get bigger, but when you are looking at your money and you're looking at the markets, the percentage is much more important than the gross number. So with that, the time to get your money into the market is right now. Even though it looks like we're always at a record high, we had record highs in the 1980s, the 1990s, the 2000s, the 2010s, the 2020s, 30s, 40s, 50s, 60s. There will always be a record high because the market is always going to go up. So if you want to be part of this 8,000 S&P 500 in 8 1/3 years, and you want to realize those gains and potentially double your money, you should invest your money now. Now, that's not to say that there's not going to be bumps and bruises along the way, as well as maybe some high-flying years or whatever. But realistically, we should get to about 8,000 on the S&P 500 in about 8 1/3 years if history and math stays consistent. If you guys like this video, be sure to give me a big thumbs up. That really helps me out in the YouTube algorithm. If you haven't subscribed yet, be sure to hit the subscribe button to grow your wealth, increase your success, and put you on the road to financial freedom. I appreciate you guys watching today, and I will see you on the next one.